George Beiruthi from FS Securities, education and information firm on the Gold Coast in Queensland, Australia. And today I'll go through our stock pick. Most of you are aware of a company called The Reject Shop. I'm sure sometime in your life you've visited probably one of those stores. I'll go through all the technical as well as the fundamental analysis. The trade, by the way, may be for you, maybe it's not. And please read the disclosure at the end of this presentation. So once again, our presentation is on the Reject Shop. We entered the trade this morning for some of our client at $7.60, and we have a target of around $8.50. And of course, you always have to put the trading stop loss with a maximum of 20% loss. And hopefully, if it doesn't go that far, but if it does, I want you out before it gets to $6 or thereabout. It is a trade for the investor as well as the conservative trader, aggressive trader, and very aggressive trader. Obviously, the investor is a long term. The conservative trader is a bit shorter. He trades from 1 week to another. The aggressive trader within the week, and very aggressive trader maybe be trading a day or two. Okay, let's start with the fair value. According to the Morningstar, this company has a valuation around $8.30, and it's about 16.6% below where the price is. It's got a high, this particular industry, it's very, very high uncertainty, up and down, subject to the coronavirus and the lockdown. The company financial health is a bit weak, but we expect some change in the direction the company is taking, and now that the lockdown has been eased. Okay, from the Reject Shop website, we find that 2019, and that's, by the way, the half year ending December before the coronavirus. Well, the revenue from continuing operation was almost the same as last year. However, the earning per share is slightly below what it was last year. And the profit for the year is $9.5 million, slightly below where it was last year. It's a small company, however, it's got really some prospect. Okay, now we go to the Yahoo website. We find the valuation. This is a company about $185 million. Not a big company, not a huge. The trailing PE is very, very high. So it's either that the price is too high or expected earning in the future to increase. The margin is good, 22%. Return on asset, 6.5% on the low side. And the balance sheet, they've got cash, nearly $316 million in the bank, and very little debt. So as you can see, debt to equity is very, very tiny. So it's a very strong company. They've got cash flow, good cash flow, and the beta is 0.85. From the Hub platform, the PE ratio failed. The current quarter earning, it passed, and it failed in some other areas. I thought debt to equity was good. Long-term earning per share growth, there is risk about it. Cash flow per share is about 30 cents, slightly better than the industry, but not a great deal. And the current ratio is 1.7. Dividend payout ratio, not a good one, minus 17%. They don't pay any dividends yet, and the market capitalization, depends on who you talk to. and return on equity negative at this stage. Again, from the Hub Group, some more information. You can compare from June 17 to June 19. We expect 2020 to be a bit lower than that because of the coronavirus. So this is actually the whole presentation will be put on the website in a few minutes time. Remember the disclosure, the presentation was prepared for general information only and did not take into consideration your objectives or your financial situation. And before you take any action, you need to know there is risk in trading, and you need to understand your risk appetite before you enter any particular trade. If you have any questions, you can ask us. These are our details. You can write to george@fssecurities.com.au, or you can ring my mobile. If you're ringing from overseas, 611, you don't need the 0. And local people ring 0411 25 9526. Happy trading and good luck with this trade.